So as just discussed with Uche, I mean, we've had Union Bank out with results. We've also had a few other banks out with profit warnings, perhaps disappointing somewhat, but then again creating just a bit more clarity as to where things are going on the banking front. Do you have appetite for banks such as Union Bank and perhaps the other rescued banks?
If I were the core investor, then I would be looking closely at Union Bank and thinking of how much more I can put in. But because I'm not the core investor, I'm just a retail investor out there, or if I'm just an institutional investor like a pension fund, I'll definitely not be risking my funds right now in Union Bank or any of the bailed-out banks. I'll rather be looking at the strong Tier 1 banks. I'll be looking at Tier 2 banks who've been bumped up into Tier 1 banks like Access. I'll be looking like GTB, you know. These are banks who are actually selling at a proper discount, actually rewarding investors with dividends, and actually have very good room for more growth. So I'll not be looking at Union Bank at this point in time.
Jimmy, let's also touch on the overall dividends as well. We have started to see a lot of the companies coming back and declaring dividends. Some are sitting on the sidelines. Is this also just another sweetener for a lot of the people that have been sitting on the sidelines and not getting involved in trade?
Yeah, actually, we hope it would actually bring more people into the market. But unfortunately, at this point in time when the corporate earnings for 2011 is actually coming with some very generous dividends. You're looking at Okomo Oil, for instance, which has done over 20% in dividend yield, you know, having declared 4 naira and an interim of 5 naira. But unfortunately, like I said, at the same point in time when banks are declaring dividends once again and other real sector companies are declaring dividends, you actually also have to look at the other asset classes, the yields on other asset classes, especially safe asset classes like treasury bills and bonds, who are doing 16% in yields, 14%, 13%. So the competition for equities is actually still very strong from other asset classes. So dividends are good. They help restore confidence, but the outlook is still cautious because I have alternative asset classes to put my money in.
Oh, absolutely, Jimmy, because as you mentioned, within the fixed income space, and it seems that bonds are seeming more attractive because of the returns that you get. When are you expecting this to reverse, or do you think that investors are going to just start balancing out their portfolios and ensure they do have exposure to various asset classes in Nigeria?
Now, interestingly, you have a number of people who are actually trying to rebalance portfolios. So you have people who are scaling back on equities and putting more money into fixed income instruments, treasury bills, equities, and even private equity. But because of the undue exposure from 4-5 years ago, you had asset portfolios, say 5 years ago, of 100% in equities. So as much as people are scaling back, you still see quite a number of institutional investors who actually are overload and overweight in equities. So as much as people are scaling back, so many people are still overweight on equities. And then you now find concentration risk within the equities. So as many people as are actually scaling back from equities, many of them are still overweight in, say, banks, for instance, or just a few real sector companies. So this rebalancing is going to continue for a while. And as long as it continues, the equity market may still suffer some, topsy-turvy movements.
Let's also just go back to the banking sector and touch on Access Bank. Some are talking of the fact that there's a possibility it could be moving to a Tier 1 bank. Are you expecting this kind of rebalancing to occur within the banking space?
And just a brief background on Access. Access Bank has always been the most bullish Tier 2 bank while it was in that tier. But with the merger or the combination or absorption of Intercontinental Bank, Access Bank is now making a very bold claim to being a Tier 1 bank. On the total asset side, on customer deposits, Asset is actually a bigger bank than Guarantee Trust Bank. But when you look at other items like revenues, when you look at other items like profits, then Access is still a much smaller bank than the smallest Tier 1 bank, which is GTB. And on other indices like return on equities, is still a much smaller bank. But because the bank has got a broader asset base, because it's got a broader branch size, broader retail market, it's got a broader customer base, then I think it can actually now lay claim and ready to fight to being classified as a Tier 1 bank proper now.
What about GT? And okay, so Access Bank doing quite well, it could be classified as Tier 1. Taking a look at GT Bank, we know that there's a planned expansion into Francophone West Africa. Is this a good idea?
Now, interestingly, the bank has been able to do very well across Anglophone West Africa, in Ghana, in Gambia, in Liberia. They've been able to carry that management discipline. They've been able to carry that customer-centric approach to all these banks. They're returning profits across West Africa. So now that the management feels that we've done very well in Anglophone West Africa, let's move into Francophone West Africa. Interestingly, they're saying that they may change from the greenfield strategy into a brownfield strategy, which is what has worked for UBA, for instance, in Burkina Faso, another Francophone West African country. So they're saying they're actually looking at acquiring an existing structure in some of these Francophone West African countries. Now, GTB has never been a brownfield strategy player. So it'll actually be nice and interesting to see how this is going to play out, how this is going to work out. But the interesting thing is this. I would say, for instance, I've got strong confidence in management that they'll be able to, they've got this discipline, they've got the vision, I believe, to actually work this out. So if it's not going to work for them, it's a bank that is disciplined enough to cut out when things are getting bad, but they will not, do it just for the ego of doing it.
The hearing by the House of Representatives, is this going to affect the capital market adversely?
It depends, and I'll tell you why it depends. At the beginning of these hearings, for instance, we believe the hearings will be looking at things like capital markets for, reforms. We believe that the hearings will be looking at things like how we're going to bring big corporations into the Nigerian market, like MTN, like NNPC, like Shell, big agricultural corporations into the market. How we're going to deepen market liquidity, how we're going to enhance the capacity of the market to raise capital for firms seeking extra capital. But unfortunately, the hearings just went into some other typical Nigerian drama. You stole money, you didn't. You lodged in a big hotel, you didn't. And lots of naughty issues like that, distractions. So if, for instance, if this new set of hearings actually focus on the real issues, of capital market reforms, then I think it's going to help boost market confidence. It's going to help boost investor confidence. But if they're just going to keep looking at all these
Fantastic,
rumors
Jimmy.
and scandals, then it's not going to be good for the market eventually.
Fantastic, Jimmy. We have to leave it there. Thank you, sir.